Dear students, good evening. Today the lecture we are starting is related to the concept of the ledger or the concept of the account. So we will discuss the ledger or account. Now what is the meaning of or the concept of the ledger or the account? If you remember in the last lectures or in the last videos, we have discussed some of the basic transactions that, for example, companies purchasing the goods, companies selling the goods, companies purchasing some of the fixed asset, the owner in the sole proprietorship is investing the money. So there are so many transactions that we have discussed. The business is paying the different type of the expenses. So for all these transactions, we have recorded them in the journal, or what we say the journal. Now, the next step in the accounting after the journal is the concept of the ledger or the account. So what is the purpose of the ledger or what is the purpose of the account? The purpose of the account is simple, that we want to know the balance. We want to summarize the same nature of transactions in one place. So that one place is called the ledger or the account. So this is basically summary of same nature of transactions. For example, if the cash transactions are there in some of the accounts or in some of the entries, the cash will be debit, in some of the transaction cash will be credit. So we want to know at the end of the month or at the end of the day or even at the end of the financial period that how much is the cash available. So for that purpose what we need the account or we need the ledger. So ledger is what? That is the summary of the same nature of transactions. We just do some of the basic transactions. For example, capital invested by owner, that is $20,000, that is in the form of the cash. So the first transaction is what? That is the capital. Who has invested the capital? The owner has invested the capital in the form of the cash, $30,000, $20,000, whatsoever is just the assumed amount. So $20,000 is invested by the owner in the new business. So now, as per the previous transactions or as per the basic accounting know-how, we know that the asset cash is debit and the capital is credit. So we will just record the entry. So this is the first entry. So the cash account will be debit and capital account will be credit, that is 20,000. Okay. Now the next thing that we have, for example, purchased furniture for $1,000 cash. Now, it is the second transaction. Furniture account will be debit. These are the just basic transactions which I have already done. So that's why we are just going through that. So cash account will be credit. That is $1,000. Now the third one, we have purchased goods. Worth $500. And again that is the cash. Mean some of the goods, some of the inventory is purchased for the reselling purposes for $500. So transaction number 3, that is the purchases account debit and cash account will be credit with $500. Okay. Now then the fourth thing that we have is what, for example, they have sold the goods on cash, let's say $700. Again, the company has said they have sold some of the goods for $700. So cash will be debit, and the sales account will be credited by $700. Let's say we have these 4 transactions here, and for these transactions what we need the account or the ledger. Okay. So the basic rule is what, that it is the summary of what, summary of the same nature of transaction, like we have a debit, we have a credit, so all these rules are there. So let's say if we analyze these 4 transactions, if you see in first of the transaction the cash is increasing, cash is debit, that is how much, that is $20,000 that is debited, so cash is increasing in the business. The second one, the cash is reducing, means from that cash $20,000 you have paid for the furniture, then again you have purchased some of the goods for $500, and after that you have sold the goods and you are receiving like the $700 as a cash. So sometimes cash is increasing, here cash is increasing, decreasing, some increase or decrease is there. In the same way furniture is increasing, the purchase or the goods are increasing, and the sales increasing. So from here we can say like we have to prepare the different accounts, or we have to manage the ledger. So first of all we have to analyze that in that how many new accounts are affected. First account that is affected is the cash account, and the second account that is affected is the capital account. So we have to prepare, or we have to manage 2 accounts. Very basic, or the very you can say the simple way of the preparing the account or maintaining the account is what, just write a T. So this T is a very simple way to manage the account. Let's say we first write the cash account, and here we write the capital account. Now it means in the first transaction we have 2 transactions, sorry, 2 effects are there. One is the debit effect and one is the credit. So in the T account, again this side is the debit side, this is credit side, this is debit side, this is credit side. So 2 accounts we have maintained. Cash on the debit side, so here we will write the cash of 20,000 as a debit one, and then the capital, that is a credit, so we will write 20,000 same on the credit side. Okay. Because these are the basic nature of the transactions are there, so we are preparing very simple T account. Now if you look at the second transactions, there are 2 again effects are there, the furniture account and the cash account. Now we have to see that how many new accounts we need. We have already the cash account, so no need to prepare a new account to maintain a new account of a cash. So we need only one account related to what, that is related to the furniture. So a small account we can prepare like a furniture, $1,000 debit, and the cash is $1,000 as a credit. Okay. Now in the next transaction if we see, now again we have some debit, one credit, cash account is credit, but the purchase account or the goods account is debit. So here cash account we have already there, so no need to prepare a new account. So just one new account is required, that is the goods account or the purchases account. Okay, how much purchase account debit? That will be with the 500, so because that is the debit side, and then the cash is credited by $500. And in the last transactions again we have a cash account that is increasing, so we have already the cash account, so we will just transfer that amount, we will post that amount. And then the second one is what, that is the sale account, so we will prepare one new account only, that is the sales account or the revenue account. So that is how much, that is $700 on the cash side. So $700 on the cash side and $700 on the sales side. So this is what the process of, just we are transferring the account or transaction in the ledgers. So that is called as what? That is the concept of posting. Posting is what? We are just transferring the amount from the transaction to the account. So amount to the account. So this is the transferring. And same nature of transaction, as we say, the same nature of transactions we have collected, we have summarized. If you see here, there are like almost 4 transactions related to the cash. So some are debit, some are the credit. But in the capital, in furniture, in purchases, or in the sale, there is only 1 transaction is there. It may be on the debit or the credit side, but here we have both debit side and the credit side. So this is the process of the transferring into the account or the posting of the account. So why we need the account, or why we need the ledger, or why we need the posting? So simple purpose is that, see, for example, this is the transaction of 1 week, or this is the transaction of the 1 day. So at the end of the day, the owner of the business or the manager of the business, they want to know that how much they have cash available. They have invested some cash, they have paid some cash, again they have received some cash from the customers, they have paid some of the cash to the suppliers. So there are so many transactions, and as you know, in the business there are not like a 2, 3, 4, 5 transactions. There may be 100 of transactions every day, 100 of purchases are there, 100 of the sales are there. You are paying for the bills, you are paying for the expenses, you are receiving the money, you are paying the money. So many transactions are there, and so many accounts are affected. So that's why what we need the account or the ledger, just to summarize, to know what? To know the balance. Okay. Why we need to know the balance? Because we want to know that how much cash we have received, how much cash we have paid, and at the end of the day, how much cash is available. So from here, because the same transaction, the same nature transactions are collected, they are summarized in the debit or the credit. So now easily we can know that how much cash the business has available. So in the same way, there is a possibility that the owner is investing the money. After some time, they are just taking money out from the business, they are injecting the money, and then they are drawing the money from the business. Then they are purchasing the furniture. Sometime they will be replacing the furniture, they are selling the furniture. So it will be on the credit side. Sometime the purchases are there, the goods are there, but later on, due to default or any wrong material, you may be returning the goods, you're returning the purchases, so that will be on the credit side. In the same way, some of the customers are returning the goods, so it will be on the debit side. So at the end of the day, at the end of the month, or at the end of the financial period, we want to know that how much is the balance of any specific account or any specific ledger. So, or in a simple way, if you remember the very basic thing, the purpose of the accounting is what? The purpose of his accounting is the understanding or knowing the financial position of the business. So with this, we want to know that what is the current financial position, how much we have to pay, how much we have to receive, how much cash is available, how much was invested, how much purchased goods are there, how much sale is there. So we want the summary of all the things. So that's why we need the account, or we need the ledger, and this ledger we will prepare by posting the transactions into the ledgers or in the account. So this posting is basically the second step in the accounting. So the first step was what? That was the journal, where we are recording the transaction. Okay, here what we did, we record the transactions. Here we are posted the transactions in the debit and credit. And what is the purpose? Because we want to know the balance of the ledger or the balance of the account. So ledger or account is the same thing, and we have used the very basic, or very, you can say, the initial level account. So that is in the T account form. The debit side is there, credit side is there, debit side is there, credit side is there. Now from this, we want to know the balance. So how we will calculate the balance, or how we will know the balance? Very simple thing. There's no technical thing, is just a basic mathematics, plus minus rule is there. So by using that plus minus rule, we can understand, we can continue, and we can calculate the balance of the account. So what we have to do first, just see the debit side and the credit side. we have to look at that. If you see, we have like 20,000 is there and 700 is there. So this is almost 20,700 amount on the debit side, and then 1,500 amount that is on the credit side. So first we have to look at which side is heavier. Heavier means on which side more amount is there. So obviously that is 20,700 on the debit side. So this amount we will write on both sides. Now the next step, if you total the debit side, the total is 20,700, but if you total the credit side, the balance is not same. So it is not 20,700, the amount is different. So it means there is some balance is there, or there is some difference is there. So what is that difference? So if we calculate, it is almost 19,200. So if we write 19,200 here, now 1,000 plus 500 plus 19,200. Now if we total it, so it will be how much? It will be 20,700. It means this is the difference. So this difference is simply a balance. So according to the rule, like a carry forward or brought forward account balances, so that is a bit technical, we will discuss later on. But here, just for the understanding purposes, just look at that this is the difference on the debit and the credit. So which side is the difference? So it is the difference on the credit side, so we just put the amount on this side. But now if we total the debit side and if we total the credit side, the difference is 19,200. So we will write on which side? We will write on the debit side as 19,200 as the balance. So this is the balance of the cash account. So now if the owner of the business is asking you as an accountant that what is the balance of the cash you have, so what you have to just simply tell him that the person amount is 19,200. The balance amount is 19,200. Okay. Now this 19,200 is the balance amount because the heavier side was debit side. So we have written this amount on the debit side. So the balance of this account is 19,200. So this is the balance. So it is also called as the opening balance also. Opening balance, why? Because for example, these are, let's assume these are only 4 transactions in all the month. So at the end of the month, so the total balance left is 19,200. So when we will start the new month, the 19,200 cash is available from the previous month, like a balance available from the previous month, which we are carrying forward. So 19,200 is the balance that is available in the form of the cash. So this is very basic thing that we just total the debit side, we just total the credit side, and we see that which side is heavier, we write the same amount on both sides, and then the difference we will write. So this is simply a difference of the debit and the credit, and then we will see which side is heavier and we will write the balance on the either the debit side or the credit side. So here we have a balance of 19,200. So this is what? This is the balance of the cash, or simply the cash available with the business is 19,200. So they started with the 20,000, they received some money, they paid some money. So now at the end of the month or at the end of the year, so they are with the $19,200 available cash. So this is the purpose of the account. So what are the steps? First, we will write the transactions. In the journal, we will record the transactions. This is for what? This is for the recording of the transaction. The second thing, we will post the transactions into the account or into the ledger. So we posted the amount. So if there is a debit, it will be transferred in the debit side, posted in the debit side. If it's a credit, it is posted on the credit side. So the debit is posted on debit, credit is posted on credit. Now, after that, the next thing is what? We have summarized transactions. At the end of the month, there may be 10, 15, 20, 100, 1,000 transactions that there. So all transactions are recorded, all transactions are posted, and they are summarized. And at the end of the month or at the end of the year, so whenever we want to know the financial position of the business, what we will do, we will just calculate the balance of every account. Like we have calculated the balance of the cash account, in the same way we will calculate the balance of the capital account, we will calculate the balance of the furniture account, we will calculate the balance of purchase account, sales account. So all the account balances will be calculated for this purpose. And from that balances, like we have 5 accounts here, for every account has a balance. It may be a debit balance or it may be a credit balance. So this cash balance is a debit balance. Why? Because if you remember the very basic rule, that cash is what, that is the asset, and asset is normally a balance of debit side. And if it is a capital, the balance is normally a credit side. If it is a furniture, furniture again a asset, so this will be the debit side. Now the sales account, that is the revenue, so that will be credit side, and the purchases or the goods, that is like a cost, so that will be on the debit side. So an asset has a debit balance, liability has a credit balance, the payables has a credit balance, the any purchases or goods or furniture, so that will be debit balance, the capital account has a credit balance, and the revenue also has a credit balance. So these are the basic concepts. In the same way, we just prepare the accounts for Ag1. So we just write here how much, 20,000, 20,000, and obviously the difference here is 20,000, but because the credit side is heavier, so we will write here as a balance. So now the balance of the cash account was 19,200 on the debit side, but the balance of the capital account is how much? That is 20,000, because there was only one transaction in that account, but that account balance is credit balance. Now in the same way, the furniture account, now the balance of the furniture account is 1,000 as a debit balance. Okay, the purchases account 500 here, 500 here, and the difference here is 500. So the balance on the debit side. Okay, in the same way, the sales account 700, 700, 700 is the difference to make the balance. So this is 700 on the credit side as a balance. So every account has either a debit balance or the credit balance. Now cash account has a debit balance of 19,200. The capital account has a credit balance of 20,000. Now the furniture account has a debit balance of 1,000. The purchase account has a debit balance of 500. And the last one, the final one, the sale account has a credit balance of 700. So in this way, we have like a 4 transactions. 4 transactions are recorded, then these are posted, and then we have calculated the balance of each and every account. So businesses have so many transactions daily, maybe 100 transactions, maybe 1,000 transactions. So they are preparing the account, they are preparing the balances, they are maintaining the ledgers or the accounts, and they are calculating the balance at the end of the day. And most of this work now is done by the computers, and even this posting, this calculating, the balancing, all these are done by the computer. So there are so many accounting softwares are there, so which are doing the debit and the credit, and then they are posting it, then they are balancing it, and they are calculating the balance of every account. So just it is a simple example where we have like a 5 or 6 accounts are there, and for every account there is a maybe a debit balance or there may be a credit balance. So from this debit or credit balance, we can prepare the next step, that is called as the trial balance. Students, we have recorded almost 4 transactions. Cash was debit or credit. From these transactions recording, we have posted these transactions into the ledgers or in the accounts, so debit or the credit. Then after that debit or credit, what we have done, we have just calculated the balance of each and every account. So like a 1, 2, 3, 4 and 5 transactions, 4 transactions were there, 5 different accounts were affected, and then we calculated the balance of each account. So cash account has a debit or the credit balance is there in the capital account, so debit credit balance is there. So from all these accounts we have calculated the balance. Now the next step in the accounting, that is called as the trial balance. Trial balance is very simple thing. We are just calculated the balance, and now we will make a table. If it is a debit side or the credit side balance, we will just write it there, and then we'll make the total of that. So that is called as the trial balance. So if you see here, we have a 1, 2, 3, 4 and 5 accounts are there. So we will just write it as a serial number like 1, 2, 3, 4, 5, and then we will make the total. So what is the first account? That is the cash account. Now the cash account has a balance. Obviously the debit side was heavier, so the balance is on the debit side. So that is how much? That is 19,200. So the same amount we will write here in the debit side, 19,200. Now the next account, account number 2, that was what? That was the capital account, and here the balance was on the credit side. The credit side was heavier, so 20,000 is the balance. So we write again here the capital account, but we will write the balance on the credit side. Now the third account is the furniture, and the furniture has a balance of $1,000, and that is the debit balance is there. So we will write the amount here. Then the next is the purchase account or the goods account. So where we have a balance again of the $500, that is the debit balance is there. So we will write the purchase account or goods account. And the last one is what? That is the sales. And the sale account has a balance on the credit side. So all these balances, either it was a debit balance or the credit balance, so we have written in the one statement. So that statement or that table, in a simple way, we can call it as what? As the trial balance. We have written the serial numbers. Even we can write here the account numbers also. I hope you remember, here we have a different ledger folios or the account number is there. For every account we can make a account number, and then we can write the account number here also. Now the next thing that we have from this trial balance, we have to see that how much is the total of the debit, how much is the total of the credit. There are only 4 transactions. We have prepared 5 accounts, and from 5 accounts we have a balances. Now we have to see what is the total of the debit and what is the total of the credit. So if you see here, the total is 20,700 and 20,700. So that amount 20,700. So this is 700. Just correction. So debit side and credit side is equal. It means trial balance. So this is the very first thing, or the first table or first statement we are preparing the accounting. So that is the trial balance, where the total of the debit side and the total of the credit side of the different accounts, that is equal. So this is the first thing we are preparing. From this trial balance, the next step in the accounting is preparing the financial statements. So there are 2 main statements are there. Obviously there are other statements, but the basic 2 statements are there, that we want to know that how much is the profit of the company, how much is the loss of the company, how much they have asset or the liabilities or the capital, how much they have to receive or pay. So all the information we will get from the trial balance. So this, we can say, the trial balance is the third step in the accounting. So the first step was the recording in the journal. The second step was the posting into the account. From that we prepared the balances, and from that balances we have prepared a trial balance. So here we have a debit and credit, and both debit and credit is equal. There are some other things, but the additional things may be there. For example, just for the understanding purposes, what we can write here like a dates. For example, just for the reference purposes, this is very simple one. In the computerized accounting or in the proper books they are maintained, there are so many other informations are written, but here just for the simplicity we have just done the debit and the credit in the T account. So if you see here, for example, the date is there, the first, second, third and fourth. So in the same way we can write the information with the account. For example, this 20,000 cash on the first, so we can write here the date as the first. Then as a reference we can also write that from where this cash is coming. So what is the source of this cash? So we can write here like a capital. It means this cash 20,000 is coming from the source of the capital. So this is the date, transaction on the date 1 on the first of the month, there is a 20,000 balance, so we can add this information. Now in the second transaction, the cash they are paying, but what is the reason? They are purchasing the furniture. So that's why we can write here what? We can write here the furniture. And the date is second. So here it is just for the reference, just for the understanding that on the first the cash is increasing, first of the month, and the reason is what? Cash is increasing due to the capital. So second, they are paying the cash is decreasing. Why they are decreasing the cash? Why? What is the reason? What is the purpose of that? They are paying it for the furniture. So on the second they are paid for the furniture. Now on the third one, if you see, they have again paid the cash for what? For the purchase of the goods. So here the goods on third, and on the first they are receiving the cash. Why? Because of the sale. They are selling the goods on the fourth and they are receiving the money. And then there is a difference is there, or the balance is there. Difference you can say, or the balance you can say. So for this, it is just additional information, but for the reference purposes or for the better understanding. So with every account, with every ledger, you have so much information: the debit side, the credit side. Now the account name is there, and even the account number we can write. Let's say we say that the cash account number is 1001. So here, let's say the cash account 1001. Again here 1001. Here 1001. Here we have a 1001. So every account has a specific number that is called the ledger folio, or simply the account number, or the post reference. So there are so many terminologies are there, but the basic one, we say that the cash account is there, the name of the account, then the number of the account, then we have a debit amounts, we have a credit amounts, then the reason of the debit, why it is a debit, and then the reason of the credit. Then even we can write the date on the first, second, third and fourth, what are the transactions. So in the chronological order, all the transaction dates will be written, and then we will write that this is the final balance. We say that the balance at the end of the month or at the end of the period, they have a 19,200 cash balance, and that cash balance is written where? In the trial balance. And if it is on the debit side, we will post it on the debit side. But if the balance, like for example on the capital account, it is on the credit side, so we will write this on the credit side. So here it was a cash and we posted it, recording and then posting on the debit side. So it means transactions, it is a flow. Transactions are going from the recording or in the journal, it is going to the account, and from the account we are getting the balances, and the balance is going into the trial balance, and then from the trial balance we will prepare the final thing, that is the financial reports of the company or the business or the individual. So to know that how much is the profit or loss, how much is the income, or there may be possibility of the expenses, there may be possibility how much they have to receive, how much they have to pay, how much is the capital, how much is liability, what is the total capital of the business, the assets of the business. So every information, the summary of that information is available in the trial balance. So this is the basic concept, that how we are recording these three basic steps in the accounting. The first step, recording in the ledger, recording in the journal, then posting the journal transaction into the ledger, and then from ledger we are preparing the trial balance and we are getting the total, and this total, the debit and credit total should be equal. So it is also to check the arithmetical accuracy that either the debit total and the credit total is equal. It means at least there is no mathematical mistake is there. Obviously there may be some other possibility of errors are there, but at least there is no mathematical mistake is there. So debit side total and the credit side total is equal. From the 5 account, 3 accounts have a debit balance and the 2 accounts have a credit balance, and then the debit and credit balance is equal. So this is the basic concepts. We have done basic 3 steps in the accounting: recording of the transaction, posting the transactions, then getting the balance, and from that balance preparing the trial balance. I hope you have understood some of the basic concepts in the accounting, but still if you have any doubt, if you have any question, if you have any query, you can ask me in the comment. Thank you very much.